Hi, my name is Emmanuel Osuya, principal at the Promise Insurance Group, and I'm a certified insurance counselor. Let's talk about the difference between inside buildup and surrender value. This, of course, has to do with life insurance policy. See, when you make your payments to a universal policy, for instance, the payment builds up as cash, and that cash is building up. So it's easy to think about a way of separating or differentiating these two. One goes up and one goes down. The cash buildup is the one that goes up. It literally builds up. So every payment you make, the insurance company is able to invest those funds. Therefore, they credit you an interest rate to allow those funds to grow, a portion of the interest that they make on the funds. Now, the cash surrender value is different. So if you take a look at your policy and it shows you a schedule of how much your money is growing or how your money is performing, it would also show you what happens if you choose to surrender that policy at any given time. When your policy has been enforced for a few years, say 10 years, there could be a lot of money in there. And let's say you're buying a condo, buying a car, or doing something significant, and you just need to borrow money from yourself. You could call your insurance agent up, call your insurance company up, ask for some of that cash buildup. They will give that to you. That is known as a partial surrender. But let's say another 5 years later, you're just done. You don't want to have the policy anymore. You want to get all your money back. You could. That is called a total surrender. Typically, up to 3 years, the insurance company may charge you what is known as a CDSC, or simply put, surrender charges, if you touch that money, right? If you ask to close the policy, they will charge you surrender charges for the first 3 years. That's just a slap on the wrist for not allowing them to continue to make money on the investment. So if you choose to surrender the policy after 3 years, read your policy, there may be no surrender charges. But that essentially is the difference. What happens to your policy if you just put money into it is a cash buildup. And what happens if you choose to cancel the policy and take your money back, it will be a different amount. That amount is known as the surrender value, and that's the clean difference. More questions? Ask your local insurance professional. I am Emmanuel Osuya, and I thank you for watching.